No, we stick to the markets because the markets demand attention. The market is rip and roaring, and we were talking about 22,000 on the morning show. We are looking at 22,100, and this is not about levels, to be very honest, because I think the market is moving beyond levels. The market is telling you something. The market is telling you that for now it seems that the market is very pleased with what's come at the budgets. Maybe it took some time to digest, but just look at that gains. Actually, if the heat map would have shown you, this is the Nifty contribution, but if you can just get the Nifty gainers list, and just the kind of gains that have come into some of the stocks, because the number of stocks gaining, I mean, this is the point contribution, but the Nifty 50 gainers list will show you how widespread the rally is, and the fact that Nifty IT is participating in a big way. Yes, you can make it out by the contribution, but beyond the contribution, look at that heat map. That is rock solid. BPCL up 7.5%, Power Grid up 5%, ONGC up 3%. 3 of the top 4 stocks are PSUs. If somebody told you the PSU story is dead and buried, I think that person has clearly gotten the call wrong. Adani Ports up 5% after the brokerage upgrades. And Alex, the broader end of the spectrum, the gains are spectacular. It's widespread again. Some names that you wouldn't have taken attention to, but from a NBCC to a SJVN to an NHPC, again, it is PSUs. The public sector enterprises are making their presence felt.
The Nifty PSE index at this juncture up over 3%. PSU Bank Index. And by the way, today's move, 3.5%, it was the top sectoral gainer in an otherwise, I don't want to say lackluster, but an otherwise cautious market yesterday, right? And it's significant gains. It just so happens that the internal software, Neeraj, if you don't refresh the page in the morning, shows you yesterday's gain plus today. So I saw 5%. I saw 5%. I was like, hey, wait, is that right? And so when I refreshed,
well, you could be deceived for that, right?
I could. So it was 1.5% in the morning at open, and it is now 3.5%. It just tells you the story that the PSU pack is gaining. So we've got Nilesh, in fact, joining in. Nilesh, thanks so much. Nilesh Shah of Kotak joining in. Of course, you spoke with us yesterday, and what we're asking people that we're speaking to today, experts like yourself, is that it took a little while for the equity market to digest what the finance minister had laid out as the plan, but now it seems to be absolutely convinced about the prospects going forward.
So let me put it in a lighter vein, Alex. Yesterday, bond market appreciated the budget much more, brought down the yield by 10 basis points. Equity fund manager थोड़े, bond manager को follow कर लेते हैं. But on a serious note, as interest rates came down, the valuation concern starts receding. Interest rate goes down, valuation goes up. And now we are reasonably convinced that the exit yield on March 25 will be much lower than what it is today. So you have a highway of lower interest rates throughout calendar year 24 and early part of FY25. That's bound to support valuation, and maybe equity is recognizing that today. Once they are sure that rates are going to go down, they are upping the valuation.
Nilesh bhai, good afternoon, and thank you for taking the time out. Neeraj here. Just wondering, yesterday I met a bunch of people at a private party, and everybody was talking about comments that you made about the budget and the implications of the same. Just trying to understand, yes, it was a bond budget. Are the markets rightly factoring in the positives that come in? Because typically a capex growth being pulled lower than anticipated would mean there could be near-term growth concerns, but medium-term it could look very strong. So are the markets right in doing this at the valuations that we are at?
So Neeraj bhai, market is taking a view. The view is that government is still increasing infrastructure investment on an absolute basis. It is up 17% from revised estimate of 9,50,000 crore to 11,000 crore. More importantly, the government is vacating space for private sector to raise credit or equity in the market. We are seeing that bank credit growth is getting constrained by deposits. CD ratios are higher, and regulator is trying to bring them to normalization. Equity market is providing capital. So by reducing borrowing program of the government from last year, 11 lakh 75,000 crore from 11 lakh 83,000 crore, there will be enough space for private capital investment. They'll be able to borrow money from banking system. They'll be able to raise money from capital market. Equity is anyway available for good promoters. And this combination will push private capex, which has remained on back foot for a while.
You know, Alex, the important connotation out there, equity is available for good promoters. I think that's a very important point that Mr. Shah has made.
And the other aspect that I want to also raise with you, Nilesh Bhai, is the fact that the domestic investor and the domestic institutional investor have both benefited very significantly from buying the dips over the past several instances of drops that you've seen, and particularly in this last leg where you've seen significant foreign institutional selling over the last month and a half, and despite that we're at all-time highs today.
So one, domestic investors have matured a lot. Neeraj bhai, Alex bhai, there was a time when there was a small correction and we used to run to our mutual fund distributors, our investors, to tell them not to worry, focus on long-term picture, focus on long-term India growth story. Now the role is reversed. If there is a correction, they call us saying that you don't get worried, Nilesh bhai. We are sending money, keep on buying and building on portfolio on correction. The tremendous maturity shown by retail investor, or at least certain part of retail investors, is all thanks to mutual fund distributors. I saw a number, 1st April to 30th September, retail investors' investment in stock market on delivery side was just 500 crores. Their preferred investment vehicle is mutual fund. If you look at the numbers from 1st April to December 2023, that's unlikely to be different. The role played by mutual fund distributor in pushing SIP culture, in buying on correction, staying invested for a longer period of time, I think that's reflected in the market, where even if FPIs come to sell, their selling creates a very small correction. And once their selling is over, market bounces back.
Okay. Nilesh bhai, one final question. Actually, two-part question. One, is Mr. Nilesh Shah currently bullish on equity markets from a 12-month perspective? Part two of my question, because you look at numbers so closely, do you reckon that earnings growth of India Inc. will be able to support this uptick that we're seeing in markets for FY25?
So let me answer the second question first. I think overall earnings growth, even for December 23 quarter, has come as per expectation. Oil marketing companies, some of the PSUs, automobile, cement, pharma, they all have delivered above expected results. IT has been a laggard. Some of the private banks have been a laggard. But by and large, earnings have still come as per expectation. Yes, earnings as a percentage of GDP at about 4.5% is on the higher side. But I think it is sustainable as we have become more productive. The two costs which is hurting India Inc. is logistics cost and power cost. Our logistics and power costs are much higher than peer group. Thanks to PM Gati Shakti Yojana, logistics cost is on its way down. The productivity is being seen over there. Interest rates will also be down and it will benefit some of the companies, not all. But overall, I still think this 4 to 5% range of GDP by way of profitability should be maintained. Will there be ups and downs? Undoubtedly, yes. Quarterly basis, there will be misses and hits. But overall, we still will be able to deliver earnings growth, which will satisfy the expectations of the market. Now, the first question, am I bullish with 12-month view? I never take 12-month view on equity market, even though my job requires me to be short-term oriented. We request investors to give us 3-year money, 5-year money, give us SIP money. So please don't take 12-month view, especially at this all-time high level of market. Please take 3-year, 5-year view. That will be more beneficial.
A great answer, Nilesh, as always. Thank you so much for joining in and for giving us that perspective. I think that last message also for the investor, look long term. And of course, the gains that we're seeing, we're celebrating it. But look at the next 3 years and 5 years as well. We have to slip into a very quick break. But remember, we're staying with markets and everything that you need to know about the fact that we're at all-time highs on the benchmark index. Do stay tuned. Welcome back. You're watching the live coverage of the equity markets in India on NDTV Profit. And as we speak, you have the Nifty 50 that's gaining about 1.7% or thereabouts off the low point of the day. But as Neeraj, who was speaking just 5 minutes back, was pointing out, it's not about the levels. It's about the fact that we have, in fact, hit all-time highs a day after the interim budget was presented and the roadmap for the next financial year was laid out. A pragmatic approach was displayed by the finance minister. Now, on a normal day, a gain of over 1% would be something to talk about for Sun Pharmaceuticals. But on a day like today, when you have stocks gaining as they are, it looks just a tad bit pale. But we spoke with the management of Sun Pharmaceuticals about the quarter gone by, and here's a slice of that conversation.
In terms of the global specialty revenues, if you look at about 3 to 4 years before, it was constituting about 7% plus or minus. And today, for the quarter, if you look at overall global specialty, it's almost inched up upwards of 20%, almost there. We have been consistently maintaining momentum and focus on this global specialty business, and growth rates have been ranging between 20 to 25%, depending on the market and depending on the quarter and the overall seasonal fluctuation. But our continued focus remains on this business to grow further across the markets where we participate in this business.
So can you give us, what sort of a contribution should we be looking at from the global specialty business in the coming years?
We are not giving any specific guidance on any specific business segment as such. We generally give the overall corporate group's revenue guidance.
Okay, sir.
However, we expect this global specialty business will increase as a percentage contribution to the overall consolidated revenues as we have seen in the past years.
Sure, sir. So also, there's been a couple of issues on product recalls throughout the year, that we've been hearing of, and issues at Hiral and Mohali are very well known in terms of the US FDA. So would you be looking at setting up alternate facilities to make up for these two, or by when can we expect a resolution on this front?
So both on Hiral and Mohali, we maintain that we are continuously working on the remediation process, and at this point of time, we are not able to commit exact timelines when the complete resolution will happen or the re-inspection will happen of these sites.
Okay, sir. And so what about the product recalls? I mean, that's associated with plants. So do we see those going down? Are we seeing some moves from transfers?
Yep. See, we're talking about product recalls?
Yes, the ones in the US.
I think product recalls is part of integral to this overall pharmaceutical business, and we at this point of time will not like to attribute any specific site as such.
Okay, sir. So there's been a lot of conflict around the Red Sea, and there's talk of maybe freight prices going up, raw material costs going up. Are we going to see some pressure on the cost front for Sun Pharma?
So as far as the situation in Red Sea, we are continuously monitoring, and we also mentioned in the earnings call that our primary objective is to ensure continuity of supply chain and availability of the medicines to our end customers. For this, if we have to move the channel of transport, we will definitely do it. That's what we would like to comment at this point of time.
So there's also a lot of anticipation building around Taro since you've revised the price for the minority shareholders. What are your conversations on that front? Because from what I understand, this could be the third attempt at acquiring the minority stake. Is it quite positive? And if yes, if this were to go through, what would you do with the cash balance that you will acquire from Taro?
So the process is on at this point of time. We have signed a definitive merger agreement for acquiring the remaining stake that Sun does not own. We have given the price of $43 per share, which is about 48% premium to the unaffected price of May 25, 2023. However, the merger agreement, which we executed subject to various closing conditions, including shareholders' approval, it's better to wait to cross the finishing line before we take up any other matter regarding Taro, being a public company.
Sure, sir. So just trying to understand on the R&D front, what usually is our split between the global generics and specialty? How do we allocate our budget, and are we looking at any other inorganic opportunities as well?
So R&D split is approximately 60-40 overall, I can say, between generics and specialty typically, and growing more in favor of specialty as we continue to invest further in our global specialty revenue. Global specialty business is a key co-driver. And for the current year, of course, you would have seen that for the quarter, we are about 6.8% of sales overall R&D investments. And we expect also the full year to be somewhat closer to our lower end of guidance of 7 to 8%, which we had given earlier.
Okay, sir. So for the allo-CPR drug that is expected to come out, so by when will it come out, and how big is the opportunity? Since the time we made the announcement, we have a couple of other competitor drugs also in the market. So how do you see this portfolio shaping up?
So alopecia areata, we have already mentioned that we will launch an approval. And the PDUFA date is, of course, July 24, which has been already shared. And let's wait for the approval and then take it forward from there.
So we'll be launching on the timeline, right?
Yeah, that's what we have maintained at this point of time.
Okay. So what kind of margins can we expect in the coming year with the India business also? So there's a lot of conversation around NLEM seeing some, drugs under NLEM seeing some pressure. Also the overall, do you expect the India business to grow at the IPM levels? Do we expect to outpace the market? And on an overall basis, how would you guide for Sun Pharma's margins in FY25?
So first, taking the India-related question, India business in Q3, of course, grew about 11.4% year-on-year. Strong performance across various therapeutic segments. And our aim is always to perform better than the market. However, it's very important to note that this growth is substantially supported by the underlying volume growth as compared to the India pharmaceutical market, where the growth is majorly driven by the price. When you come to EBITDA margin, however, we are not guiding for any EBITDA margins. We continue to remain focused on cost efficiencies throughout the organization. After even consolidating the expense of newly acquired business like Concert and others, if you look at the last 8 quarters, our margins have been in the range of 25 to 26% plus. Our key core drivers like global specialty business, India business, apart from other business, have maintained strong growth momentum, which is also a key factor for the resultant EBITDA margins.
The Chief Financial Officer of Sun Pharmaceuticals speaking to NDTV Profit there. We are holding on to gains, considerable gains at that for the Nifty 50, 1.6% higher at this juncture at about 22,050. And by the way, the Nifty Bank up about 300 points from the low point of the day and trading with gains of about 1% or thereabouts. We have to slip into a very quick break. We've got more coverage of the markets lined up for you, so do stay tuned. Welcome back. It's frenetic action in the equity markets in India today. And in fact, just pull up the Nifty 50. It's just about broken past the 22,000 mark on the downside. Just minutes back, we were very close to that 22,100 mark. See, I'm losing track of where we are, but essentially, it's not about the levels, is what we were talking about a little earlier in the session, of course. It is the fact that there is a rip-roaring rally underway. Take a look at the heat map on the Nifty 50 as well, and that will give you a bit of a sense of how things stand, because even at this juncture, with the ground that has been given up just a little bit, and we are, by the way, once again above 22,000. There are only 3 stocks on the Nifty 50 that are trading in the red. One of them on account of relatively weak two-wheeler sales, and that is Eicher Motors. HDFC Bank has been under pressure and has been a bit of a laggard. And then on the other end of the spectrum, you have a lot of the public sector enterprises that are doing particularly well. So BPCL, Power Grid Corporation of India, ONGC from the public sector pack that are doing well. Of course, the advance decline ratio also very favorably tilted in favor of the advances. We have to draw this particular show to a close, but we've got live coverage of the markets for the rest of the session, so do stay tuned.